Okay, welcome everyone. Will start our new unit, which is reporting, corporate reporting, which we'll go through in a minute. And as a couple of you already know me, my name is Anjun. I'm working with University last 10 years, and I'm also teaching at University of Bradford. Background is ACCA, doing part-time practice with one of my other friends, and also I'm doing some work for Leeds University. So I'll try my best to meet your expectation. Please, if you have any question, any point you not get it, please always ask, drop me email anjum@ukvers.co.uk. And if you have any other question related admin, please admin@ukversity.co.uk, drop us email and we'll try our best to get back to you as soon as possible. So we'll start, please. Anyone, any question? I think so we know each other before, so we can start our lesson. But please, you can interrupt me if you have any question. Feel free, always ask. So we'll go through before starting new unit. First of all, we'll go through the unit specification, what we're supposed to learn, and then we'll start our lesson. So can you see? Yes, so everything is on our Moodle page. So we'll go through the unit specification. So please, you can find here unit specification, which will go through the corporate reporting for strategic business, which is long-term perspective we are looking, and we'll go through. Of course, this unit is very important. We'll discuss about a lot of accounting standard, how these impact, and always financial statement need to be true and fair. Financial statement should be prepared. A couple of you heard about Enron. Enron is the biggest scandal because a lot of accounting new standard after 2001 been introduced to tackle these problem, and the financial statement need to be true and fair. International Accounting Standard Board, International Financial Reporting Standard. We are using more international accounting standard instead of local standard. The reason is due to the harmonized system, because the companies have the operation throughout the world, not restricted to one country. Okay, it's a level 7 unit. Guided learning hours approximate. We're supposed to be spend 60 hours, but your background, everyone is accounting. So we'll try our best, to explain the basic concept and try to apply those in, and we'll try to embed, some examples. So today lesson is our LO1, understand the fundamental ethical and professional principle in relation to the accounting standard and corporate reporting. That's the key. We'll go through two assessment criteria we have under LO1, explain the importance of professional behavior, compliance with accounting standard, and we'll discuss about ethical requirement of corporate reporting. That's will be the key in our lesson. We'll then the next lesson will go to understand the appropriateness of financial reporting framework, which will look these LO2. Lesson 3 will be LO3, financial statement. Group entities will go through consolidated statement for group, associate, and subsidiaries element we'll discuss. And the lesson 4 will go through the financial ratio, interpretation, and the user of financial ratio. That will be the key, So if we look the indicative content, what we're supposed to learn. So we've been given a lot of accounting standards here. So we'll go through professional bodies, International Accounting Standard 1. So International Accounting Standard 1 is about how to prepare and present the financial statement. How many types of financial statement we prepare in account? So there are the 4 major types of the statement we prepare in account. Statement of comprehensive income, we call income statement, or we call profit and loss. Second statement is the statement of financial position. And the third statement is statement of cash flow. And the fourth statement of change in equity, or the shareholders statement. So these are the statements is under IS1 we must prepare, and of course financial and the notes, everything we need to show. IS2 is about inventory. Inventory should be recorded at cost or net realizable value, which is mean the sale value whichever is the lower, like Window 98 CDs, if you bought it, maybe 300 pound, 200 pound CD software, but Window 98 is outdated now. So maybe you have in the warehouse and its value is 300, you wrote it, but real value, the value which we can sell it and recover maybe is only £5, less than £5. So we can, should we revalue our asset according to the current value of the asset, not the value at cost which we bought it. So that's, IS2. Statement of cash flow, we prepare under IS7. Three activities: operating, financing, investing. Operating is day in and out business. Uh, then we have investing activities, which is if you have a spare cash, you can invest in non-current assets. Uh, and then third is the financing activities, which is equity and debt financing. We can raise the cash. That's, we have when we will go through, and then we have accounting policies under IS and estimate and errors we need to be adjusted. And IS 10 is within 90 days we have to publish the report. The adjusting events are not, when the report's been signed off, that should, it's non-adjusting in this period, but we can adjust it in the future period. Property, plant, equipment, very important. Our accounting standard, depreciation method, revaluation assets, and the property, plant, equipment. That's, the elements we discussed. Revenue, the criteria, we can recognize the revenue you receive, the service not performed, treat as a revenue. That's which will go through. Impairment of asset need to be impaired when it happen due to the number of reasons. Those we'll discuss. Contingent liabilities mean our contingent asset is the asset. If the definition about asset is a resource controlled by entity which will flow the future economics benefit, it's called asset. So we need to be make it adjustment accordingly. IS 37, which is about these provisions, and IS 38 intangible, which is mean goodwill, how we can measure reliably how much goodwill we can include in the financials. That's the key. Go through. Anybody any question, please? Before starting? Yes, no. So please, if you have any question, feel free to ask. So we'll go through accounting standard. Maybe day in and out you're dealing with these standards, or depends, your nature of the work, up to which level you're working. So that's, carry on happening. And RL, sorry, is RL, so sorry, I'll click maybe wrong. I'll go through the LO1 today, as we mentioned. So which will go through LO1, learning outcome 1, which is about understand the fundamental ethical professional. So what are the ethics? Ethics mean the moral principle, and these are quite crucial in working in accounts and the accounting standard and corporate reporting. That's So always scale 1 to 10. It's good to reflect, how many standard I know. And if I don't know these standard, we can explore these, because they in and out really these standard, because the financial statement need to be true and fair in the light of these accounting standards, and these should be prepare accordingly. Otherwise, we're not going to achieve the desired objective as an organization. I mentioned you indicative contents as in the unit specification. We straight move to 1.1. Explain the importance of professional behaviors. So there are the main objective is ensure that transparency, reliability, consistency, comparability, and the financial statement. Financial statement, they need to be standardized accounting policies and principles. We need to be, so transaction, all the companies will be recorded in the similar manner if followed the accounting standard. So ethics, what are the ethics? Those are, which we'll discuss, the ethics are the moral principle. What those are, one of the abbreviation of the term we'll carry on using is called PPCIO. So 1 second, I'll show you. PPCIO is called Popular People Chat in Office. I can look around and we can go through. Yes, please. Okay, you can mute yourself, please. And PPCIO. Okay, welcome. Okay, so the term we are using, PPCIO, is mean popular people chat in office to remember. Some people are very famous. They carry on chatting in offices, and that's will carry on using the word. So first, be the professional behavior. We have to keep our professional unbiased, uh, providing true and fair information, transparent information. Second P is professional competencies and due care. Professional competencies and due care, which is mean due care is up to date knowledge and skills that we need to. And the third is that's why we need to CPD, continuous professional development, 35 hours in a year if you have the if you're full-time employee. C, the confidentiality. Yes, so we need to make sure we keep the information confidential, not declaring to third party. Integrity, always not compromise, which is mean honest with the facts and figures. And O is the objectivity, not biased information, not conflict of interest information. The information needs to be true and fair. So these are the 5 professional code of ethics. If you're a member of any really, the professional bodies such as ACCA, ATHE, and various others. So these are the professional code of ethics, which is set by IAS. It's called International Ethics Standard Board. Yeah, International Ethics Standard Board set these ethics in the light of, and these awarding bodies need to follow these professional code of ethics, which we can look around. Uh, yes, so please, anybody, any question here? If you have, please welcome. Okay, next we have professional versus professionalism. Profession is a body of theory or the knowledge which is used to support the public interest. Professionalism is the taking sport to the public interest. So as a professional person, I always try to be work in the wider interest of the public. Really, we need to be in the best interest of all the stakeholders, not just the few, stakeholders. So we have to look around, not the wealth maximization only shareholders, but the deeply of care about the society. So we have to reflect the true and fair information. So professionalism is the member are seen to be acting professionally, literally having, the professionalism. Professionalism may also interpret in more state of mind, while the profession is provide the rules, the members of their possession of the followers. So professional behavior impose the obligation and the member of the comply with the relevant laws and the regulation and avoid, any action. So we have to look around these in a accounting profession over time. We can look around the appears to be taking the more, proactive than the reactive approach. So we have to look around the body of the theory and the skills. We have to be technical knowledge and abilities we carry on with the common, the code of practices, which is set by ethics and the moral principle, 5 professional code of ethics and acceptance the duty towards the society. We have to avoid it. We follow the confidentiality. But if the court says we have to declare the information if it's involved in the money laundering and the if which is avoided interest of the public, we have to declare the information if the court give order. Okay, so accounting standard, these are, which carry on reflecting, the financial statement. We have the UK standard, FR or SAP, which we can secretary accounting principle, and we can look around international financial reporting standard. We have international accounting standard, these, and under the international financial reporting standard, we can look around quoted companies, we can look around international financial reporting, that's more important. International accounting standard board, the committees and all, after they pass, the standard. So conceptual framework is the principle and the concept international accounting standard belief should be underlie the preparation and presentation of the financial statement. The financial statement objectivity is provide the true and fair information to the stakeholders. Okay, so International Accounting Standard Board, which is set the standard, and we have to make sure that it's work in and true and fair information, and they can make the decisions accordingly. Economics resource, which is asset liabilities, and expenses should be clearly reflected in the book of account. A going concern, always the accountant and the auditors give the views about the business is going concern. It means the business will carry on as normal. There is no intention the liquidate, or the quartile scale of operational uh, materiality. Materiality means is significant. The business will carry on as a normal. Every information material is showing in the financial statement. Then we have a characteristic of financial statement. These need to be true and fair. Always be looking relevant. All the relevant information should be reflected. We need to be look around. The financial statement should be prepared accordingly, and we have to. Otherwise, we can't really. So we have to look around in the light of these. So relevant is the capable and making different decision in include materiality. Faithful represent what is the report is need to be complete. Free from errors, information should be, and comparability. These are enhance the characteristic about financial statement. Comparability, 2 years figures, very verifiability. What we are saying, we can verify asset is we own it. It will flow the future economics benefit. How much worth of within 90 days the timeline. The publish this information, prepare the statement and the public domain. The information asset goes under asset, liability goes under liability. Those people have basic understanding about accounting. They can better understand and make the decision. So International Accounting Standard Board, all the materiality information should be contained in the financial statement. Uh, we have a Company Act 2006. We follow the International Accounting Standard and prepare a statement in line with the accounting legislation and the policies. So asset is mean anything you own it, which will flow the future economics benefit is your asset. Liability is a legal obligation by law. You have to pay. Equity is the owner's residual interest, in honor it's a capital. Income increase the economics benefit, expenses decrease the economics future economics benefit. Contribution from the owner increase the equity, which is mean investment, and it will help the business be expand. Distribution of the owner decrease the equity resulting from the transfer of the owner in the capacity of the owner, because dividend and all, which is if we keep it and reinvest it, it increase. Then, as we mentioned, IS 38, which is International Accounting Standard 38, intangible asset, which is mean goodwill, patents, copyright. We have to look around the who is on it, what is the value, and we look around how we can measure reliability. Yes, how much is cost. So a research expense we can't capitalize it, but the research and development, like a pharmaceutical company developed the medicine for COVID-19 vaccine, but it's been all the tested, and we know we have a facility to make the medicine. Demand is there. We can say this is the asset now. What the money we spend it to generate on the formula and the research we are development stage, we can treat as asset. Otherwise, we're not going to treat as asset. Goodwill is the intangible. You can't see it, but we treat it as the asset. Normally, we not consider the internal generated goodwill. Uh, we use the accounting equation net asset, which is mean asset minus liability is equal to net asset. Net asset always equal to capital. If somebody is willing to pay more than the net asset, they are paying you the goodwill, the difference purchase consideration, and that's it create the goodwill which we can measure reliably, because the asset is mean anything controlled by entity which will flow the future economics benefit. So we have to look around. If you're looking at asset, technical feasibility, intention to complete, ability to use and sell, generate the probable future economics benefit. We have availability of adequate resources and measure reliably. Then we can treat as an asset as a goodwill. Otherwise, we're not supposed to treat as an asset. Any question, please? Anyone? If you like to ask. If you like to ask, please, you can ask. Okay, amortization, impairment, the asset value need to be adjusted by reflecting true and fair, and that's quite crucial, which we have to do. Okay, impairment, of course, impairment is a loss. It means reducing the value of the asset. It can be decline the market value. It can be look around the adverse effect. We can look around significant changes operating Or the asset be obsolete because due to the new legislation you can't use it because that was the coil, and now we are using more electrical equipment. That's due to global warming that can be we can impair. So then impairment goodwill can be because the goodwill asset, but it can be impaired if we have the bad publicity of the company. So what is the rule to impair the asset? So asset should be impaired at lower of carrying value or recoverable value. Carrying value means asset minus accumulated depreciation is equal to the carrying value, or we call net book value. Recoverable amount, the amount which we can sell it, we can recover. Fair value, which is mean market value of the asset, less disposal if we are disposed of, and the value in use. Like you have a photocopier, you bought it £5,000, and the photocopier give 200,000 prints, and you can use it for suppose. And then what's happened? So we already made the copies, but we bought it £5,000. Now we have the value, carrying value of the machine is 3,000, but the value, market value of this is 2.5, and the value in use we can only uh, print. The printing is a worth of £2,000 worth of the printing the machine can be. So now we can say the market value is 2.5 and the value in use is 2,000. So we'll impair asset and the base of the market value, and in our book is showing 3,000. So £500 asset need to be impaired further. The value of the asset need to be, and impairment is the loss goes in the profit and loss. Okay, so accounting impairment losses, that's and revalued, that's we can treat, and we need to be adjust asset accordingly. Anybody any question, please? If you like to ask, welcome. Inventory is three types of inventory. We have raw material, work in progress, finished good. Inventory need to be recorded at the cost or net realizable value, which is the lower. Net realizable value means sale value, and like I quoted earlier, the window 98 example. Okay, so LIFO is not anymore allowed standard. It's a management accounting you can use, but in financial accounting, we're not supposed to be value our inventory at the based on last in first out method. We can use it first in first out, and FCO. Those are allowed, and those we can use for financial accounting standard. Then we have a provision. Provision is like a contingent liability section. If it's can be contingent asset. For suppose if we have a case against the company, there is a likelihood 80%, 60% we lost the case, and we should recognize in the book of account as the liabilities, and it's our legal obligation, and it's reduce the economics benefit, and that should be, because at the end of the day, financial statement need to be true and fair. Contingent, it's an obligation that arise from the past event for the existence will confirm only the occurrence, no more uncertain future events. The present obligation that is not recognized and don't recognize, if we can recognize it, then of course we need to be, because it can be outflow the future economics benefit, and instead of bringing in the future. So contingent asset is asset if we have a contract, if the formula has been accepted, and we have the highly likelihood we can use that, and can be clustered as a contingent asset with some some conditions. Okay, anybody any question, please? You can carry on asking. Okay, then we have a IAS. That's we can look around the asset is meet, it is criteria, the likelihood remote is a high, we can treat as asset, and we can disclose in book of account meeting all these. Otherwise, we're not supposed to disclose. Okay, so IAS 10 is called events, adjusting events, and the financial statement. After the signing, we're not supposed to make any amendment. Within 90 days, the financial statement year end should be prepared, and if not being signed off, any information which we can or transaction we need to be adjusted in that period. IAS 18 is about revenue. Revenue, all the revenue, because accrual concept is mean matching concept, income and expenses should be recognized in the year when we are next. So that's, which we'll carry on looking, and that's we need to be. And the dividend income, all these, these need to be only recognized when you can measure reliably, and there is a possibility, like if you have the contract construction and you receive the money at the beginning, you do the debit the cash and credit the revenue normally, but actually you not provide the services. So at the end of the year, you can only recognize the revenue as you provide the services. Rest of is a prepaid income. Prepaid income mean advance is a liability. If we not work further, we have to, by law, we have to pay. So only the recognition criteria we have to make and reliable, and the percentage of the work and the expenditure, then you can say, otherwise you're not supposed to be recognized in the book of account. Okay, the cost model is historical cost, revaluation gain, and the revaluation model we can use it revalue our asset accordingly, and that's we need to be showed in the book of account. Depreciation, which is come under IS 16, property plant equipment, look around the depreciation straight line method you're using, cost uh, minus your residual value divided by the number of years you can use it. Are you using the diminishing or reducing balance method? And at the disposal, you can find the asset and revaluation and review the depreciation charge and look around the disposal and recognize how much asset is left. If we need to be and disclosures in the financial statement under the non-current assets, let's say, these are all assets, how much we bought it at cost, how much is the depreciation, how much is the carrying value, and that's, we'll show the at the end of the how much is book value in the book of account. Okay, IS 7, which is about cash flows. We prepare cash flows according to IS different, direct, indirect method. We can use it. Three activities: operating activities mean the normal business day in and out. Then we have we can look around investing activities, and like Tesco businesses operating the activities is their consumer goods, but sometimes they have a spare cash they can invest into uh, various other companies or various other businesses, so that can be look around. So this is the layout which we can profit before tax, and then we add back and we follow the yes, increase and decrease in the current asset, current liability, and it can impact on the cash, and the taxes and all. So direct method, and these are the layout in direct method. We can use the requirement, the cash flow statement. We can say net cash from operating activities, net cash from investing activities, net cash from financing in and out of these, and we can make adjustment accordingly. And at the start, at the beginning of the year's cash flow, how much is the cash balance which showing in the balance sheet. This balance in the cash flow after the reconciliation, it should be matched with the balance given in the balance sheet, and that's, it's a crucial, because this statement you can see it where the cash it came from, and it all being given the operation what's come, and which things you add back and minus, and the interest and the expense we need to make adjust. That's operating activities. Property plant equipment addition and subtraction is adjustment in the investing activities, and if it current and non-current asset that come under the financing activity. So that's, which we can look around and we'll make adjustment according. Analyze the ethical. I mentioned earlier, the ethics mean the moral principle. We discussed about 5 professional code of ethics. Popular people chat in offices. Integrity mean honest, objective, unbiased. Professional competencies mean CPD, up-to-date knowledge. Confidentiality, don't declare third party without the permission of the client, but we have to look at the wider interest of the society. Only we can declare. Professional behavior is the reliable, responsibility, and timely. And then we have ethical principle. We can look around self-interest, self-review, advocacy, familiarities, and intimidation threats, and we need to be minimize self-interest. Self-review, these are the threads, we need to be look around threads, we need to be minimized. like not involved where that leads to the compromise your professional, not taking the gift, more than 50 pounds, because if they can influence you, your objectivity, true and fair, maybe somebody's very close relative, friends, moral. So we need to be think about these, and that can be impact, self-review is checking on work in the, so that's which we can look around advocacy thread and the conflict of interest, family threads and intimidations, if no one is intimidated to compromise your objectivity and integrity, because at the end of the day, a financial statement need to be true and fair, and please, that's you need to be make sure we follow. Okay, so today lesson we discuss about, please, you have been given the OSPON and various other handout. If you want to look around, you can look around 6.3 and 6.4, the chapter which we discuss are if any particular standard Kaplan resources, and other than that, you've been given all the required resources available our Moodle page. So please, you can follow them from is here. You will see the books there. Yes, so you will see the journal articles and all other bit and pieces are there. Okay, then if you last thing, if you want to download yourself, I can download and share with you as well. If you go on ACCA and you can, FR is called financial reporting subject, and please, it's good to be, you can download the handout this, and then of course, we can use it for our, and any question you want to pick it, you can pick, from this booklet. So that's also help you to prepare and look around. Okay, so I'll share with you this in the chat box. That's also help you to prepare, and you can listen your, it's independent free. So that's, we can look around and we can use it for our learning perspective. Okay, so that's all from my end. Anybody, any question, please? So today we discuss about IS1, we discuss IS2, we discuss about IS7, IS10, IS16, IS36, and IS37. That's the key, standard we discuss, and all the purpose. The financial statement need to be true and fair, not use the creative accounting, and increase the transparency and enhance the value of the goodwill of the company. And that's, we need to be prepare our financial statement accordingly. Okay, thanks for, and that's all about. And from my end, anybody, any question, please? Can you hear me okay? Any question? Okay. Lloyd, any question? Any question? No. No question? Okay. So, Nurul, any question if you want to ask something?
No, thank you very much. Thank you. Thank you.
Thank you. I'll speak you next week. So please, before next lesson, if you can look around LO2 indicative content that help us, and if any particular question you like to ask, so please feel free ask, and have a nice time, and I'll speak you during our next
Sorry,
lesson.
I have one question.
Sure.
Is it any deadline for our submit the assignment?
Which assignment? Is it corporate reporting?
Yes.
Okay. You have submitted, you want to submit?
No, actually, I'm not starting, but I just know, is it any deadline for our submission?
Yeah. So what you will do, normally we deliver 4 weeks this unit first. The 5th week we'll do the assignment discussion. Then normally we request, within 2 weeks you can submit your assignment.
Oh, okay.
So if you want to submit before, we can send you the previous, recording, and we can assist you those lines. But if you just started and you attend all 4 lessons first, and then we do assignment discussion, I'll go through how we can structure, where we can find the example how we can write it, and then of course, you can do your assignment and you can submit. We can give you formative feedback first, then we can give you summative, and then we can sign off and we can submit to the awarding body.
Oh, okay. Okay, got it. Thank you.
Very welcome. Any question from anyone else? No. Okay. Thanks for attending and have a nice weekend. And I will speak to you next week then. Thank you. Enjoy weather.
Thank you so much.
Thank you.
Bye-bye.
Bye.